Okay, let's clear this up because this myth stops more buyers than almost anything else. You do not need 20% down to buy a home. 20% is an option, not a requirement. There are loan programs that allow much less down, depending on your credit, income, and goals. And I see people every year who actually qualify right now, but they sit on the sidelines because no one ever explained their options to them. The right down payment isn't about a magic number, it's about choosing a loan that fits your situation, not one you're forcing yourself into. Education changes confidence, and confidence changes decisions. If this myth has been holding you back, it might be time to get real numbers instead of guesses. This one matters more than people realize. Pre qualification and pre approval are not the same thing. Pre qualification is usually a starting conversation based on what you tell a lender. Pre approval goes deeper, it's backed by documents, income review, and credit verification. When it's time to make an offer, sellers and listing agents look at that difference very closely. One opens the door, the other actually lets you walk through it. Knowing which one you have helps you avoid disappointment later. This is one of those small details that make a big difference when it's time to move. Perfect credit sounds nice, but it's not required to buy a home. Different loan programs have different credit guidelines. What matters most is understanding where you are and what options are realistic for you. I see buyers delay their goals because they think they have to be flawless before they can even ask questions. Progress matters more than perfection, and knowing your starting point gives you power. A lot of people believe once you get a mortgage, you're locked in forever, and that's not always true. Many loan programs allow extra payments and even early payoff without penalties. It depends on the loan's terms, which is why understanding them matters. And some people want flexibilities, others want long term stability. There's room for both, and the ideal that you're trapped is outdated. Knowledge gives you options. That's why it's important to understand what your loan terms are before you commit and not after. This one causes a lot of unnecessary fear. Applying for a mortgage can cause a small, temporary dip in your credit, but is usually not the disaster people imagine. Mortgage inquiries are expected when you're shopping for a loan, and they're often grouped together during a short window. That's very different from randomly opening multiple credit accounts. If you're planning to buy, focus on shopping for a mortgage, not opening new credit. Understanding this helps you move forward without panic or hesitation.